All right, let's get started. Thanks so much for joining Carnegie Museums from Home, members only. I'm Kara Fixie, the Assistant Director of Philanthropic Engagement and Stewardship here at Carnegie Museums of Pittsburgh, and it is my pleasure to have Beth Lynch from Fort Pitt Capital and Akemi May from the Carnegie Museum of Art here to talk about charitable gifting strategies. But before I turn things over to them, a few housekeeping notes. First off, I would like to thank Fort Pitt Capital for their partnership and for sponsoring this event. If you tuned in to our earlier event last month and met with or listened to a neurosurgeon, a financial advisor, and my colleague from Carnegie Science Center, then you know that you're in for a treat tonight with this collaboration. Come visit. The museums are open, and I encourage you to come back into the galleries and explore some of our new exhibitions. Wild Things, I believe, just opened up at Carnegie Museum of Art, so hope you can check it out soon. And then, as usual, if you have any questions during tonight's event, you can click on that Q&A button at the bottom of your window. So without further ado, I will pass over the mic to financial advisor from Fort Pitt Capital, Beth Lynch. Thanks, Beth and Akemi, for being with us tonight.
Thank you. Okay. I'm going to share my screen here. Give me 1 second. Make sure I get this up there correctly. Kara, you can see my screen okay? Make sure we're good, right?
Yes, it looks great.
Perfect. Thanks. Very good. Well, thank you everyone for attending. Really appreciate you taking your evening to join us for this charitable gifting partnership that we are doing with the Carnegie Museum of Art. This has been a wonderful partnership, and we really appreciate it, and appreciate all of you that are joining us this evening. There's a little bit about myself. I've been a financial planner for over 26 years, and I love working with my clients and meeting their goals and educating them on different ways to take advantage of tax situations. But more importantly, many of my clients are very philanthropic and do quite a bit of giving every year. And it's so exciting to see how many individuals are giving every year. And the amounts of dollars and shares that they give. I'm always surprised when I see the numbers each year, and it's just been recorded that in 2020, individuals, bequests, foundations, and corporations gave an estimated of $417 billion to U.S. charities. This is about 5% more than 2019. Individuals alone gave $325 billion last year, foundations $89 billion, bequests were around $41 billion, and corporations gave a little over $16 billion. And as we all know, everyone gives for different reasons, and we all want to do good for the charity. One of the things that we want to do is sometimes it's just to help make a difference. It's an opportunity to give to a worthwhile cause. It makes us feel good, or it might even strengthen our personal values. It helps the charity in fulfilling its mission. It can also be beneficial to you. So, through all of your giving, there's a benefit from a tax standpoint. So if you itemize your taxes, your gift may be tax deductible. There are qualifications though, such as who the recipient is. They have to be a qualified 501c3 charity. Also, it depends on the type of gift that is received. Is it cash, appreciated securities, or complex assets? And the recipient. So is it a public or a private charity? All of these will determine the amount of your deduction and your ability to itemize. And these are the few things that we're going to talk about tonight, is types of gifts and the tax benefits that you can take advantage of when you decide to give or deciding what types of assets to give. You should always discuss these items and the tax benefits and the ability to deduct those contributions with your tax advisor, and work closely with your financial planner, your financial advisor, to figure out what makes the most sense from appreciated tax, gift or securities. So there are 3 types of giving that we're going to talk about this evening. One of them is a direct immediate contributions. There's a direct deferred contribution and structured gifts. The first are the direct gifts to charities. These benefit charities immediately. And there are 3 types of direct gifts. One of them is cash, which is always welcome by charities. If you're able to itemize your gift, this may offer the largest tax potential or the largest potential tax deduction for you, especially this year, which I'll show in a few slides. The second is a qualified charitable distribution. This is when you give from your IRA. This helps you to avoid tax on your required minimum distribution. QCDs are not new. A QCD, or charitable qualified distribution, is a gift from your IRA or your inherited IRA that is made directly to a charity. These are permitted once you reach the age of 70 and a half. Many of you may recall that required minimum distributions from IRAs, 401ks, qualified assets used to be age 70 and a half. So they lined up. Now, due to the Secure Act of 2019, the age in which you need to take your required minimum distribution was up to age 72. So they no longer align. However, the qualified charitable distributions are still able to be done at 70 and a half and older. But why would you give from your IRA? Well, the distributions from your IRA at the required age are taxed as ordinary income. And it can be quite expensive from a tax standpoint. Not only can it put you in a higher tax bracket, but it could also increase your premiums for Medicare Part B and D. Giving to a charity from your IRA, however, does qualify and counts towards your required minimum distribution. So let's just say that your required minimum distribution is $50,000. If you decide to give any or all of your required minimum distribution of $50,000 to a charity directly, direct transfer, it would not be considered taxable on your tax return. And that's because it's going directly to a qualified charity. So it's not subject to taxation. However, you are limited to how much you can give per year from your IRA. And the maximum amount per year is $100,000. One caveat is you need to be careful if you do make contributions to your IRA accounts in a year that you make a QCD. So they've extended the age in which you can contribute if you have earned income to an IRA. And since that is now over 70, if you make a QCD, make sure that you did not make a contribution. Otherwise, you want to talk to your tax advisor about how that will work for the deduction. And then the third type of direct immediate contributions is appreciated securities. This is when you give a gift of appreciated securities. It permits you to avoid the capital gains on the assets so that the charity gets the full amount of the gift. You avoid the capital gains tax, and you can get a tax deduction if you itemize. And here's how that strategy might look. For example, let's say that you have a share of stock or a couple shares of stock that are now worth $50,000. You have a cost basis of $5,000 in there. So you paid $5,000 for that stock. It's now worth $50,000. You'd like to give to charity and you want to use this stock to contribute to a charity. You have 2 options. The first is you could sell the stock and then donate those after-tax proceeds to the charity of your choice. You would first have to sell that stock, and because that stock had a tax basis of $5,000, it's worth $50,000, you will pay tax on the $45,000 gain. And at a 15% tax rate, you would pay $6,750 of taxes, which means that the charity would then receive, and your deduction would be $43,250, which gives you nice savings, tax savings of about $3,630. The other option, though, is to contribute the stock directly to a donor advised or directly to a charity, in which case you avoid that long-term capital gains tax, and the full amount, the $50,000, would go directly to the charity. So not only do you get a larger tax deduction, but the charity then receives a higher grant also, which would allow you to have a tax saving of $12,000, which is another additional $8,370. So giving appreciated securities can help you to avoid capital gains and still get a tax deduction. But you have to keep in mind that there is a limit, and there are certain tax incentives for different types of assets that we give. And this year is a little different. So in 2021, the tax incentives to give cash have changed. This is not normal. This is due to the Consolidated Appropriations Act of 2021, and it's only eligible for clients filing for 2021 tax year on the cash. So if you donate cash to a public charity, 100% of your, up to your AGI is deductible. Again, that's not normal. That is something they've changed. They changed it last year, and they extended it on to this year too in this Consolidated Appropriations Act. However, if you give cash to a donor advised fund or supporting organization, that AGI limit is 60%. A private foundation is 30% of the deduction. Now, if you give long-term appreciated securities, which the example that we just showed, that deduction is up to 30% of your AGI limits to public and 20% for private. Now, if you look at capital gains and you look at the difference between a short-term appreciated security and a long-term appreciated security, this is where you definitely want to work with a tax advisor or your financial advisor in determining what shares of an appreciated stock that you donate to a charity. And the reason is, if it's a short-term appreciated stock, and I'm going to use a cryptocurrency because we've seen the volatility in that, and many people have bought it for $4,000. It was worth $40,000 in less than a year, perhaps. And if you sell that outright, you'd be taxed at ordinary income rates, and you may be subject to the 3.8 Medicare surtax. However, the charitable deduction is limited to the cost basis. So if you paid $4,000, that's the amount of the deduction that you would receive. However, if those assets are longer than a year, you've held them, owned them longer than a year, you can see that if you would sell them, you'd be taxed at either the 15 or 20%, depending on your marginal tax rate. You could still be subject to the 3.8 Medicare surtax, but your charitable deduction is usually the fair market value at the time of the contribution. So very similar to the example that we gave with the $50,000, assuming that it's long-term. Next. The next is direct deferred contributions. So what are direct deferred contributions? These are gifts to charities that are delayed or deferred, and they depend on an event. They're also referred to as planned giving because careful planning is required when putting this type of strategy together. And there are two general types of deferred gifts. One is a long-term commitment. This is when you commit to give a gift to a charity that you will fulfill over time or subsequent to a major life event, such as an inheritance, a sale of an asset, or some other type of windfall. And then the second is a bequest. And a bequest is just a gift that's made under the direction of your will. You can put inside of your will that at your death, that a certain dollar amount, a certain percentage of an account can be sent directly to a charity. So many individuals use bequests to set up an enduring fund, such as a scholarship or an endowment that memorializes their commitment to the charities. Others give an outright bequest to a charity of their choice. The third type of giving is through structured gifts. So these are gifts that basically separate the contribution from the distribution. So this means that you put your money inside a vehicle, such as an endowment or a donor advised fund that we talked about, or even a charitable trust or a foundation, when it suits you, and then you distribute the gifts from that vehicle. And you can do this at any time. And those foundations can either be community foundations or private foundations. These types of vehicles can be pretty complex, and they vary greatly as far as how to set them up, how the deductions work. And so I want to go into more detail on each of them, but I wanted to talk first about kind of bunching or clumping of gifts, because it kind of really relates back to what I was saying as far as making the contribution first and then having time to distribute that over 1 year, 2 years, 5 years, 10 or more. So for example, how bunching works. Let's say you have a married couple who annually is able to deduct $26,000 of itemized deductions. And this includes $10,000 in donations to a donor advised fund or a public charity. Because that amount is slightly over $25,100 in standard deductions for 2021. And I'm talking about the charitable donation of the $10,000, assuming some mortgage interest, some state and local tax, the SALT deduction. That's what gets you to the $26,000 per year, which is about $900 over the standard deduction. So each year, by doing that, you have a tax savings of about $315 a year. Over 3 years, though, you'll have a tax savings of $945. However, if you bunched or clumped or front loaded, people will say, your charitable contribution into a donor advised fund, you can then put in $30,000 in 1 year, get your mortgage interest, your SALT, and now your itemized deductions are $46,000. This allows you tax savings of $7,315, for example, for 2021. And then in 2022 and 2023, you just take the standard deduction of the $25,100 in those years. The idea of bunching is really to take advantage of itemizing and the standard deduction. So because of the substantial increase in the standard deduction more recently, up to $25,100, many taxpayers who historically itemized are finding it more difficult unless they make larger gifts. So they find it very advantageous to take the standard deduction in certain years and then to take the bunching or the larger itemized deduction in years in which they have higher earned income that they can offset with the itemized deduction. The idea here is, again, to make a bunch of contributions in 1 year, take the deduction in that year, and then make those distributions. And the great thing about using a donor advised fund, for example, is that if you put that $30,000 and you still only want to give $10,000 per year, you can, once it's in the donor advised fund, This is where the distribution comes later. This is where you can say, I want to give 10,000 in 2021, 2022, 23, or you can make that amount whatever you'd like over however many years you'd like to do them. So that's kind of the idea of bunching. So getting back to the vehicles that are kind of commonly used, just to give you an idea of what these, each of these vehicles are. An endowment. Endowment is an enduring portfolio that provides ongoing support to a charity for a charity's needs. It can be specific, such as a specific concern or an activity. It can be very broad, unrestricted support for just the organization's operations. This type of account is often housed within, under the organization's purview. So that is that the gift is made to the organization with the direction that it will be used to establish an endowment, and the proceeds are then invested in a portfolio that the organization oversees. And it's subject to the investment policy statement that is created upon the establishment. On the other hand, there's what was called the donor advised fund, which I mentioned earlier. And the donor advised fund is a giving vehicle with sponsorship from a public charity. You receive a tax deduction right away, and you can make distributions from the fund in a current year or over an extended period of time. You can contribute and or recommend the grants at your leisure. As for the benefits, you qualify for the deduction immediately without having to decide what charities or how much the distributions are going to be. Donor advised funds are especially appealing if you need to offset a year with high earnings or to seek maximum ability to itemize, as I mentioned earlier. As always, it's very vital to talk to your tax advisor when putting these types of bunching or using a donor advised fund or endowment before you take any action. And then there's also the charitable trust. There are two basic types of charitable trust: the charitable remainder trust and the charitable lead trust. And there are variations of each, which will be important to explore based on your goals. The name of each type of trust really reflects the charity or the charities that will be receiving the benefit at the end or the remainder, or now annually, which is the charitable lead trust. Which works best for you depends on your goals, how you want the assets to be distributed. In both types of trust, highly appreciated asset is given to the charity trust for a specified period of time. Both types of trust make annual distributions. The remainder trust to the designated income beneficiary of your choice, the lead trust to a charity of your choice. So let's go into each one of them. I have a little chart here. Oops, got a little click happy there. Sorry about that. So for the charitable remainder trust, it's funded again with appreciated assets which are sold. Because the trust is charitable, the assets are not eroded by that capital gains taxation because it's going under the trust. Then the proceeds can be repositioned as needed by that charity. And again, that structure depends on your choice, depending on how you want it to go out the time frame. I like this chart a little bit better just to give you an idea. You're making the contribution into your charitable remainder trust over a distinguished or a specific amount of time that you set up, partial deduction, and an income stream come back to either you or the beneficiaries of your trust. After the time, that designated time that you've put in place, the remainder goes out to the charities of your choice. Compare that to a charitable lead trust, which is still funded with appreciated stock or assets. The income is paid to the charities of your choice first, and then the assets pass back to you and your heirs after the designated time. So to put that into play, you as the donor put assets into the charitable lead trust. Then the trust makes those payments to the charity over the time frame, either a fixed term or into after the beneficiaries. And then after that term, the remaining assets go back to either the donor or whoever the donor has designated as the beneficiary when the trust term expires. These can be pretty complicated, so you'll definitely want to work with a trust and estate attorney to create the trust so that it fits your goals and needs. Each type of trust has multiple choices, so you'll need to make sure that you can design it and address your specific goals. The last is foundations. And foundations are really just tax-exempt organizations that are established to address a variety of causes and concerns. We've all heard about all the different foundations that are available out there. So while the goal is to exist in perpetuity and their mission may remain stable, the specific efforts and the focus of the support, your support may change. So foundations, just you have to look at those pretty carefully. So when you're creating a different endowment or a foundation, there are two different types of foundations. There's a community foundation, which is an organization that seeks to support charitable needs and interests in a particular area. These organizations can help you create your own foundation, and they can handle ongoing administration, management, annual distributions according to your criteria. And since the opportunity options or objectives available to you can change over time, Community Foundation can also provide you ongoing research to determine suitable recipients for your grant based on your criteria and your objectives. This is also great for multi-generation involvement in your efforts at allowing children and grandchildren to participate in your process. The other is a personal or private foundation. This is the pinnacle of both control and expense. A personal or private foundation can be tailored to serve your specific goals. At the same time, it assumes full responsibility for all the administrative duties. For this reason, private foundations tend to require substantial gifts to establish them. Creating this type of entity really does require a seasoned specialist to draft the necessary legal documents to maintain a foundation or to maintain its how it's recognized and to determine the suitability of the gifts that are going in there. So you need to be very careful and make sure that you use very seasoned, suitable professions to help you administer a private foundation. That's all for my presentation on charitable giving and different ways and benefits of giving. We do have a few upcoming webinars at Fort Pitt Capital. We're talking about special needs in September and how we choose stocks on September 29th. And of course, we're going to have some questions at the end, but always my favorite screen that I have to show you for compliance purposes is our disclosures. And with that, I'm going to turn it over to Akemi to give you a brief history of giving at the Carnegie Museum of Art. Akemi?
Great, thanks, Beth, for that presentation. I'm just going to make sure I'm sharing my screen. Okay. Well, I'm glad that we had that overview because a lot of what I'm going to talk about really touches on some of the types of giving that Beth has talked about. So you'll essentially get to see a brief history of giving at the Carnegie Museum of Art. And, just to kind of learn a little bit about overall strategies that have been incorporated within the museum to accept these gifts, to make them visible, and just in general, just our appreciation of these types of gifts and giving overall. In many cases, we have transformed the collection primarily through the generosity of patrons, both within the city, sometimes occasionally outside the city, and international patrons, but it really relies on the generosity of our visitors and our donors. So as many of you know, our institution was founded 125 years ago by Andrew Carnegie. And one of his primary emphasis during his speech in the inauguration was that he was going to donate this building that we love in Oakland, but that he wanted his friends and the people of Pittsburgh to help support the museum, and to do that by being generous. He was a man who really advocated for the distribution of his own wealth during his lifetime. And he wanted his friends to do the same. And many of them have made contributions to the museum over many, many years, and really benefited us. So some of the types of giving, I'm going to kind of structure this similar to how Beth did, is to just go over a few examples of the types of giving that have really transformed our collection. So, a little delay. So certainly what we have are lifetime gifts of art, which is one of the most popular forms of giving to the museum, where a donor decides to give a part of their collection, either an individual work or a few works of art. It really depends on the type of collector, but many of them are incredibly impactful, and I just have a few examples here. I won't talk about all of them, but just to highlight, we have work on the left by Willem de Kooning, which was a recent gift of Dr. and Mrs. Karl Salatka as part of a larger collection of contemporary art. And this is a really fabulous sketch of a woman. Next to that, we have a really fascinating Baroque piece, which transformed our old master collection, which was a gift of Mrs. Horace Benny Hare. And I know many of you have no idea who she is, but when we started doing research into exactly who she was, because this is a work that was donated in the 1950s, and her name was sort of unrecognizable to many of us who currently work at the museum, we discovered that she was the niece of Mary Cassatt. And then we found out that this painting was once owned by the painter Mary Cassatt, and she gave it as a gift to her brother, and then by descent through the family, it was ended up with her niece, and she ended up donating it to the museum. So there are many examples. The Ivan Albright painting here was actually a gift of the artist himself. Speaking of other gifts from artists, the Paul Gauguin print on the bottom part of the screen was a gift of the artist Dwayne Michaels, or the photographer Dwayne Michaels. So we have many different types of gifts through someone's lifetime of where they've actually just given art objects themselves. Another major form of giving and truly transformative was the giving strategies of Sarah Mellon Scaife. So you have here on the right a work that was given to us by Mrs. Scaife during her lifetime, of a work that was part of her family's collection. This is a work that was purchased by her father. This is George Romney's portrait of Mrs. Trevor. And so she donated that to us during her lifetime. And three other paintings sort of represent the different types of giving that Mrs. Scaife really made major contributions in the 1960s, and then her family in the 1970s. So in the lower portion of the screen, we have Franz Hall's Portrait of Man. And that was actually a work that Mrs. Scaife bought for the museum, but she purchased it herself at auction. And she actually won it with the intention of giving it to the museum. And then, of course, we have our fabulous Monet water lilies and the Paul Gauguin landscape with three figures. And in both of those instances, Mrs. Scaife, sort of in consultation with the museum, identified that she wanted to buy works of art for the museum. And so she gave them directly she gave funds, essentially provided funds, which enabled the purchases of these works. After Mrs. Scaife's death in 1965, her family continued her legacy, and by giving works of art or giving funds that enabled the purchase of works of art. And so many of those are really sort of the star pieces of our Impressionist and Modernist collections. Of course, you have Van Gogh, Matisse, Bonnard, Pissarro, Signac, and Degas as major works that came in under the direction and guidance and support of Mrs. Scaife's family. One of the more interesting stories, and I gather this is a new news for many of my colleagues at CMP, is the story of the Patrons Art Fund, which I find incredibly fascinating. This fund was actually established in 1922 by Willis F. McCook, who had the idea that what he wanted to do was to raise money for acquisitions, for the museum to buy works of art. And so he promised a gift of $10,000 for the purchase of paintings, with the pledge that he would give $1,000 over a 10-year period. And he would give it if the museum was able to get 9 other people to do a similar form of pledge. In the end, they ended up committing or getting 13 people to commit to being patrons, the Patrons Art Fund original members, as well as getting a matching pledge from the Carnegie Corporation of New York. And so one of the major aspects of this fund was that it enabled the museum throughout the 1920s and 1930s to make major acquisitions. In particular, the very first painting that entered the collection with Patrons Art Fund is Mary Cassatt's Young Women Picking Fruit, which was purchased in 1922, the year that the fund was established. Here you also have a painting by Alfred Munnings, a painting by George Bellows, a portrait of Anne. And around the 1930s, this is kind of before the museum had committed to only spending the proceeds of this fund. What they actually did was they spent down much of the capital. And so we had to shift gears in the 1940s and 1950s and 60s in order to replenish the fund, is that we solicited donations from patrons to rebuild the fund, but for specific purchases. So for instance, the Georges Rouault, the Old King, was one of those works that came into the museum in the late 1930s. It's probably one of the last few from that original Patrons Art Fund. The sort of second generation of that fund were efforts like the Giacometti. So Alberto Giacometti's Walking Man, which came in 1961, there was an active campaign to approach donors and have them contribute with a specific purpose of buying this particular sculpture out of the 1961 International. This is not a standard practice that we do today, particularly with many of our funds which have turned over to endowed funds, of which we only spend the yearly earnings, but it's one of the few funds that has a really interesting story about donor involvement, and it's still an active fund today. Although we don't sort of approach people for this specific fund as we did in the 1960s. Other types of, as Beth said, planned giving are bequests. And bequests are a major portion of the donations that have been given to the museum. In particular, we have one example by Howard Noble. So his bequest came in, was about, about 36 works of art, which truly reshaped our Old Master collection. And this came in the 1960s. So here you have just a few examples of those Old Master works that came in through Mr. Noble's bequest. This beautiful illuminated manuscript page by Simon Benning, a wonderful portrait of Christina by Giovanni Domenico Tiepolo, as well as a vision of Saint Alphonsus by Adrian Eisenbrandt. So these works really sort of added to our Old Master collection, of which in the 1960s we were really trying to build. And another part of Noble's gift was that he established a fund. So in addition to the bequest, he left the residuary estate to provide funds for the purchase of works of art, purchases within the manner in which he was collecting, so Old Masters. So in the 1960s and 70s, much of that fund was used to purchase works by Francesco Francia, Gian Lorenzo Bernini with this portrait bust in bronze of Pope Gregory XV. The Ancona altarpiece, which is a really quite spectacular golden, shining, shimmering piece that you can see on view in Scaife, as well as this really subtle but very appreciative, very remarkable still life by Jean-Simon Chardin, the sort of master of the French still life of the 18th century. Another major bequest was given by James Austin. Austin was long involved with the museum and actually frequently donated artwork during his lifetime. He also, advised the museum in collecting and sort of exhibiting Japanese prints during his lifetime. But when he passed, he had actually bequeathed the museum a collection of nearly 2,500 Japanese prints, ranging from traditional ukiyo-e works to modern Japanese prints. And it was both the scale of this collection and the quality of the prints that really created and established this museum as a leading major collector of Japanese prints when he bequeathed these to us in 1989. And they joined several hundred prints which he had already given during his lifetime. So here you have just a few examples by Hiroshige, a print of the Great Bridge from his famous series, The 100 Famous Views of Edo. You have a really remarkable snow scene by the artist Hisui, and a really fascinating portrait of another printmaker, Munakata, by the artist Sakino. So just a few examples of that bequest. And finally, last but very not least, are the endowments that Beth talked about. So creating a fund that would enable for the purchase of works of art under the discretion of the museum. And here you have just two examples of endowments which are still used today. On the left, you have just a small sampling of works that were purchased using the Leiser Art Fund. Now, this was an endowment that was created in 1940 by the Pittsburgh artist Martin Leiser, who in his will, he included instructions for the establishment of the endowment, as well as a description for the intended use of those funds. And so since 1940, the fund has been used primarily for the purchase of works on paper, with a strong focus on prints. And he actually had some of his friends as advisors to the museum for some of the early purchases. Most recent purchases have been made, certainly along the lines of what Leiser had described in terms of what he wanted the fund to do. So you have great works, both by Edward Hopper with Night Shadows, a really fantastic print that was purchased in the 1950s. In the 1949. You have a drawing by Kirchner, which is associated with one of the paintings in our collection. So we often try and acquire works that relate to existing works in our collection. And more recently, you have a really fascinating sort of study in color etching by the Impressionist artist Camille Pissarro, and a couple of prints, roto reliefs by the sort of avant-garde artist Marcel Duchamp. On the right, we have one of our major endowments, which is the Heinz Family Fund, and just a few of those sort of recent acquisitions. Really helped us transform the collection by adding major works and major gifts, which we wouldn't be able to add without this fund. So here you have works by Antonio Canova, Terpsichore, the muse of lyric poetry. You have Ari Scheffer at the top, sort of a painting of Dante and Virgil encountering the shades or the ghosts of Francesco and Paola. And we also have a landscape by Robert Duncanson, one of the earliest African-American landscape painters to really gain any recognition in the 19th century, to really create a true reputation as an esteemed painter. And most recently, the acquisition of the Angelica Kaufman, Virgil writing his epitaph at Brindisi. So these are just a few works which came in through the Heinz Family Fund, but again, talking about ways that endowments have made major changes to the collection has been, really quite beneficial. So those are just a few examples. I do want to stress that there are many, many other gifts. These are just a few highlights. And, I know that we want to open it up for any questions. I don't know if we have any in the queue. I'm going to stop my screen share.
Thank you, Beth and Akemi. All right, so as Akemi said, we'd like to open it up for any questions you have, and a few came in the chat, I think. And so to start us off, a question for Beth. Are there any trends that you're seeing in terms of giving behavior that are connected with contemporary events, or even if they're not? I think it was just this audience member was interested in trends that you may be seeing.
Sure. Actually, with the passing of that Consolidated Appreciation Act for 2021, the cash gift has been a lot more advantageous last year and this year. So last year, I talked about those required minimum distributions, and a lot of individuals used a lot of qualified charitable distributions to make. In the past, that was kind of the trend. An easy way to give to charities was through IRAs. With last year not having to take that required minimum, we saw a lot of our clients writing the checks. So, creating some cash for them from other places, avoiding as much capital gains, offsetting and doing some cash contributions. Again, it really does depend on the individual's tax situation. But we do see a lot of this year. We'll probably see a lot of appreciated stock. I'm tending to see a lot of those requests come in just because of the market running. Even through this COVID year, I can tell you that no one probably expected the markets to run as much as they have, and equities have really taken off. So I would say the biggest trend that I've been seeing has been the donation of appreciated stock, because people want to avoid that capital gain to give the cash, And this is still a great way to do that and still give to a charity and reduce their tax exposure. So I would say capital gains. The other is I do have quite a few clients who do have works of art, and a lot of those works do go through bequests, as Akemi talked about, through their wills. So those are probably the two.
Thank you. And a question for Akemi. If you had $1 million to what area of the collection or what piece would you use that fund or that endowment or that gift towards?
Oh, I don't know. There's so many. Yeah, well, it's interesting. There are some areas of the collection where $1 million is just a drop in the bucket if you follow the market. And other areas where that can, buy you a major work. I mean, it really just kind of depends on the market trends at the time, and also what actually comes up for sale. I think that we are doing a lot of work lately in terms of diversifying the collection. So we, along with many other museums, are looking at our spread or sort of the representation of artists, both women artists and artists of color that are in our collections, and truly trying to strengthen that representation of these, these artists who have historically been overlooked or just not added to the collection. So in my, I would spend it along those lines. To be quite honest, at the moment, that's kind of our driving force. Either that or also conservation, because the care for some of these collections, you'd be surprised at the cost of. I was talking to a colleague earlier today about replacing a frame on a painting, and frames can run upwards of $20,000 depending on the size of them, or if it's an original frame. So something, thinking along the lines of not just a work of art, but also the support for the care of collections is also really beneficial for the museum itself, because oftentimes people will donate the art or they'll donate funds for the acquisition of art, but they don't think about, how could funds really truly be spent to help support the existing art that we do have. So that's kind of another strategy of how, some of the money could be deployed to benefit the collection itself.
Great answer. All right, let's see here. This is another one for Kemi. If someone does own a contemporary work and would like to loan it, is there a process that they should follow to kind of investigate that?
Yeah, I would, some of our loans do come in through exhibitions, or, occasionally we do have a work that's on loan if it's deployed, for a particular purpose or to sort of supplement an existing installation that we do have. It's sort of, just general practice to get in touch with many of our colleagues in ACE, so in advancement, to connect with the curators to see if there is a need. In many cases, there may be, and in some cases there may not be. We have a small portion of our own collection on view, and we are trying to deploy more of it at the moment, so that we can up that number of what's on view for the public itself. But yeah, certainly I would reach out if there's something that you have that's a spectacular work that we couldn't resist. Let us know.
Yes, as Akemi said, if you are interested in having that conversation, feel free to email membership or any my colleagues in advancement, and we'd be happy to help you navigate the museums and see what the next steps are. All right, our next, a great question for Beth is, what is the most common question that you get from clients?
Wow, the most common. That's pretty broad. I'm going to keep it to the charitable side.
Sure, yes.
A lot of times it's how much should I be donating each year? Is probably the most common. And then the second is what asset, should it be cash or security? But it really does. I think the most common is how much, because of the tax ramifications. So doing the tax planning and working with their CPAs to make sure that we can figure out the best strategy for them to donate as much as possible and get the biggest deduction or benefit from their side.
Thank you. All right, wow, we're already almost at 8 o'clock, and I have a few upcoming events to share. So thank you, Beth and Akemi, so much for sharing your expertise and insight and ways that the museum is connected with what's going on in the outside world, and vice versa. So I will hopefully send us off in a smoother way than I kicked us off this and share a few upcoming events. So speaking of our incredible collection at the Museum of Art, on Sunday, we have a Zoom in tour with our talented team of docents, and they'll be exploring various works that highlight doors and windows throughout the collection. Then on the 22nd, our curator of mollusks, Tim Pierce, will be on Zoom to share some jokes as well as his incredible knowledge about marine mollusks. And then on October 12th, we have another monthly member tour with the Museum of Art. I once again want to thank Fort Pitt Capital for their incredible partnership and sponsorship of these two events. Like I just mentioned, it's been a great collaboration and way for us to kind of connect what's happening in the museums with the work and service that their team is doing outside of the museum walls. I also want to thank all of our incredible donors and members in the audience tonight. As Akemi was talking about, your support and generosity is incredibly impactful and has, in the Museum of Art's case, helped build an incredible collection and shared the stories and talents of artists through decades. So thank you so much for being part of our museum family, and we hope to see you on Zoom soon. So Kemi, Beth, thank you once again, and everyone have a great rest of your evening. Bye-bye.
Thank you. Have a good night.
Thank you.